The top 5 stocks that can make you a millionaire in 2021. In this video, I'm going over my top 5 stocks for February 2021. I'm obsessed with the stock market and I have spent the last month analysing hundreds of stocks. This is my list of stocks that I think are the best buys now. I'll go over the key numbers, recent news and why I expect them to grow. So let's get started. First stock on my list is NIO Incorporated, stock ticker NIO. This is an electric vehicle and battery company that's headquartered in China. Right now, they have 4 very good looking cars on the market with more to come, so right now NIO is trading at 57.11 cents with a 52-week low of 2.11 and a 52-week high of 66.99. So right away, you guys can see that this company has grown so much in the last year. If we take a look at their 1-year price chart, we can see that their stock price was hovering under 10 for a long time, and since June or July of 2020, that's when it really started to grow. We had a huge rush followed by a correction, and since then NIO has been trending upwards. This company has a market cap of $89.029 billion, and since they are not yet profitable, we do not have a PE ratio. Their earnings per share is negative $44.10, and they do not pay out a dividend. Looking at their valuation measures, we can see that they have a price to sales ratio of 34.86 and a price to book ratio of 77.97. As far as profitability, like I said, they are not yet profitable, with a profit margin of negative 56.26% and also a negative return on equity of negative 116.34. Their balance sheet, however, shows a very good current ratio of 2.42, which means that they have 2.42 times the current assets as current liabilities. It's always interesting to see what analysts have to say. So on a scale of 1 to 5, 1 being a strong buy and 5 being a sell, NIO is rated as 2.4, meaning it is between a buy and a hold. The average analyst price target is 49.59, which is about 15 lower than the current price of $57.11. Now, when I recommend NIO, it's not me pushing you guys away from Tesla. In fact, I think that Tesla is a tremendous opportunity. NIO is another fantastic electric vehicle opportunity that I really think has the potential to grow massively. However, that being said, it is on the riskier side because it is very volatile. We may see more pullbacks in the short term, but that would present even better buying opportunities. And long term, I don't think it really matters what price you pay for the stock in 2020. Next up on my list is Square Incorporated, stock ticker SQ. This is an American financial technology company that's from California that makes point-of-sale software and hardware and also offers financial and marketing services. Right now, Square is trading at 202.46 with a 52-week low of 32.33 and a 52-week high of $246.49. Looking at the 1-year price chart, we can see that this company has performed exceptionally well in the last year, and they are just off their all-time highs. Square has a market cap of $91.297 billion, a PE ratio of 307.22, which is insanely high. Earnings per share of 66 cents, and they don't have a dividend. They have a 5-year PEG ratio of 4.45 and the price to buck ratio of 48.72, which is also extremely high. Now, looking at its profitability, Square has a profit margin of 4.05% and the return on equity is pretty good at 18.72. They're carrying total cash of about $2.8 billion and they have a ratio of 1.7 right now. Analysts currently rate Square as a 2.4, meaning it is between a buy and a hold, and the average analyst price target is at $222.60, which is about 20 higher than the current price of $202.46. So as you saw, Square has performed extremely well over the last half decade, and yet there's still so much upside in my opinion. You know why I think Square is so much upside? Well, they are less than 2% penetrated for the B2B cash app business and 3% penetrated for their point of sales business. The digital payments market can reach $2 trillion in the next 5 years. So yeah, overall I think that Square is a very great pick for a long-term stock number. On to stock number 3. Here we have Microsoft, another major player on the market that's expected to dominate for many years down the road. They have a market cap of around $1.6 trillion and are expected to grow by around 15 per year over the next 5 years. That's incredible for such a large company. Microsoft is one of the largest companies in the world. They are up 38 this year and currently trade at a forward PE at 31.8. The company does pay out a dividend and it yields just over 1%, and this company is still one of the major players that has some high future growth expected down the road, and their cloud services are really what's going to lead the future growth. If we take a look at some of their cloud products, they were able to grow substantially over this past year with a very strong increase for future growth. They have a beautiful income statement as well. Top line, beating new record highs each and every year, but what they want to point out is their net income. Over the past 12 months, they have brought in $146 billion of total revenue, and compare that to their net income of over $47 billion. This company has very high profit margins of around 30+%. And if we take a look at their future expected growth over the next 5 years, we're expecting 14.5% per year prospective growth. And if we take a look at the stock price, it is considered a strong buy right now, coming in at a 1.7, and the average price target for the shares since that close to 240 over the next 12-month span. Let's now jump right into stock number 4, which is Alibaba, one of the largest companies in the world. With a $690 billion market cap, they are one of the leaders in the technology and e-commerce space within China, and they have some high future growth expectations. If we take a look at their company, they are traded under the ticker BABA and currently sit at around $260 per share. The company is up over 24 over the past 12 months, but if you take a look at a shorter term perspective, they have seen a massive pullback as of late. Going over the 6-month chart from their 52-week high, you can see a pullback of over 17%, down $55 per share to where we sit today. So I think we're at a nice point in the share price that this may be a nice addition to a portfolio. If we take a look at Alibaba over the longer term, they're at more than 200% on the 5-year chart. They're growing tremendously, and they currently trade at a PE just over 24, and on the 52-week range chart, you can see they are trading on the center. If you take a look at top-line revenue back in 2016, they ended the year just over $15 billion. But now, in the past 12 months, they've brought in over $86 billion of total revenue, which is absolutely incredible. And year after year, they're beating their previous records, setting new all-time highs and growing at an exponential rate. And this company is still extremely profitable. As well, with net income for the business at over $19.4 billion over the past 12 months, this is absolutely incredible, and their balance sheet is flawless. As well, they have over $60 billion of total cash on the balance sheet right now. So a ton of upside potential, and analysts expect this company to reach a new all-time high. Now we're taking a look at a digital payment solution, which is PayPal. This company's been growing at a massive rate, and they actually have a market cap slightly above Bank of America at $249 billion. The company is up over 100% this year, and shares have exploded, and people are doing a nice job of adapting to the current market conditions. As more people spend money online, PayPal helps facilitate these transactions. They're a market leader, and they provide us with a very safe and secure wallet to allow individuals to confidently buy items from digital platforms. And PayPal has done a beautiful job of expanding their household name. They make a lot of acquisitions into smaller fintech companies to help them grow, and I believe some of their smaller subsidiaries are going to help the overall umbrella of PayPal really develop over the long term. So this is a growth company, of course. They do not pay out a dividend, and they're expected to see some huge growth down the road. If we take a look over the next 5 years, we're expecting 23 per year growth from PayPal. And taking a look at the buy now rating coming in at 1.9, it is considered a strong buy, and PayPal has seen some beautiful financial statement growth as well. This company has seen massive top-line boosts, and over the past 12 months they've brought in $20.2 billion of total revenue, and each and every year they're hitting new highs. So PayPal is stock number 5, a very strong company. I do love it, and I've been talking about them for a long period of time. They're getting into some other very interesting aspects as well, such as the cryptocurrency space, think Bitcoin, which is really going to expand in 2021 because they're going to be the first and largest financial institution to allow you to buy, hold and sell Bitcoin within your digital wallet. And they're going to allow you to use that Bitcoin to make purchases at over 20 million digital retailers, which is the first in the entire world. Not many players are doing that, and PayPal is set to explode by offering this new expansion. Okay guys, I hope you liked the video and learnt something valuable from it. Do hit the like button and subscribe to our channel if you want to achieve financial freedom. See you in the next video.